Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 27th of November. So I've seen a pretty controlled week this week. Most of the majors have behaved themselves and stayed in a pretty reasonable range, and also the indices have certainly flattened out a little bit. So we'll jump straight into the charts and have a look at what we can find ahead of today's trading session and early into next week. So we'll start out here with the Aussie USD. It's had a reasonable move earlier in the week. I mean, it went about 50 or 60 pips after it broke this little mini resistance level here that we highlighted last week. It finally broke through, but it certainly found a little bit more resistance not very far away, just before the 74 cent mark, really. So we know 74 cents is going to be a pretty solid resistance level for it, but at the moment it seems to be struggling to reach even it. We need to go to a smaller time frame to really highlight the weakness in this market. You can see here that the last day and a half's worth of candles have been pretty mediocre. They haven't really had any conviction at all, and the MACD is starting to run out of steam as well. When we go to a 1 hour chart, you can really see the wick action. It's hovering around the 20 moving average, but it's certainly not giving us any indication that it wants to go long at this stage. Now, look, we've got to be mindful that we had the Thanksgiving holiday in the US during this last session, so all the markets are a little bit flat today, and quite often it's quite seasonal that the markets stay pretty quiet even on the Friday. So we probably don't expect really big moves for the rest of the week, really, because the long holiday generally extends onto the weekend. So I guess we're not really surprised by this price action, but you know, it might have one last burst and try and get to the 74 cent mark. I'm not overly keen on trading this one unless I'm going really, really short. I've been scalping this for a long time, as you know, and this is probably no exception. If we're going to go long on here, I'm probably only going to go for an absolute scalp, maybe to the 73.80 zone, just these highs here. That's pretty much all I would be looking for on this, mainly because I think it's going to be a pretty quiet day on the markets, and also it does look like it's run out of steam. So failing that, if the 20 doesn't hold up and it starts to short off for some reason, then maybe start looking for shorts back into the 73 cent zone. Can certainly do that. This area here around the sort of 73.20 area is probably going to be providing the first level of support. So I'll put that line up there and show you exactly what I'm talking about. Around this level here, you can see that it was obviously resistance through here, a little bit of support here. So that's probably a logical place, but it needs to make a new low. So if price gets down and breaks the 50 and closes down here on a 1 hour chart, I'd be looking to short it down to the 73.20. So only a scalp again, like I said, not a lot of pips, but still it's definitely there if it does play the game. All right, we'll move on to the US dollar CAD. This is an interesting one now. Like, this is still hovering around this 130, gripping to it like a magnet, and it looks like it's fighting for dear life to hold up above this level. So, you know, again, we're probably expecting a pretty quiet market on all of these indices and pairs that we're going to look at today, but there's still scalping opportunities. Now, you need to go down to the smaller time frames to really identify what may or may not happen here. Now, the one thing I have noticed, that obviously this level is at the 130, but we are starting to see a series of higher highs and higher lows on a 1 hour chart. Now, you know, generally when it's a really strong level like a 130, you want to be requiring probably a reasonable time frame like a 1 hour or a 4 hour change of trend to believe that it's going to bounce off this level. But because we're going into a quiet market, it's not likely to happen on a 4 hour. So I think we can take the 1 hour as our guide. If we get a new high, you know, basically here, if we get a close above the 130 sort of 23 area, I would be convinced that this is going long. Even if just for a scalp again, like I said, it's not we're not going for anything spectacular, but if you're going to go for a really short scalp, which is probably what I would recommend on a day like today, the 130 sort of 47 area, you can see here, this area was support here, and support here, more than likely going to cause us a little bit of resistance. That would be the first place I would be looking at maybe taking some profit, or at the very least breaking even. And if it breaks through there, the 130 is probably 95 to 131 is definitely on the card. That's obviously the next place that it's going to gravitate to. But the first real problem is going to be at this level here. And you can see they're nearly equal apart. So certainly a scalping opportunity to there, and a bit further to the 131 if it does happen to break through this level with a little bit of conviction. But we're definitely getting a series of high highs and higher lows on the 1 hour. MACD is definitely in our favor. It's switched up and is above the 0 now, and you can see that the 20 and the 50 is fast approaching across. So it's got a few things going for it, this one, and probably it was definitely better than the Aussie, because at least it's got some candle structure on bodies actually filling out the price action, and that means that there's a little bit more momentum and a little bit more certainty as to where this one could potentially move. So not a bad one to keep an eye on, but look for that higher high here before we start longing that one. All right, we'll go on to the dollar index now. This one's still it's fighting for dear life at the 92 cent mark. You can see here the 92 level, I should say. 92.12 is the level I drew up the other week. You can see it broke that. It's come up and tested the 20, which is good. I think that it may, try and push to the 92 again. I mean, it came back and retested the 92 from below in the last session, which is pretty much what we expected. We talked about this during the week, actually. And now it's starting to, sell off. The 20 moving average is providing a little bit of a resistance point as well as the 92. If you go to a daily, that's probably going to highlight a little bit more how weak this is actually starting to look. It's had the retest of the 92. I think this is just one of those ones where you've got to watch fairly carefully. If it wasn't a public holiday, I'd probably be looking at shorting this, but I find it difficult to sort of short the dollar index when I know that there's probably going to be pretty light trading. So it's really just a bit of a scalp. You want to be basically either longing it to the just above the 92 or shorting it to the previous low here, which is about that 91.80 area. Very, very small trades. This is a really short and sharp scalp. Both of them have got enough in them if you wait for the really small time frame change of trend. That's all I would be looking for on this one. And maybe attacking that. But I think there are better trades out there. I'd probably be using this one as a guide more than anything else for what the euro and the other dollar-based pairs are doing. But no question, the 92 is a very, very serious level. It has broken it, and it's already retested it from the bottom. It's just a case of a watch and see. Now, if it makes a new low, it's going to go short and probably go short for a long way. But if it does happen to break above the 92 again and form a bit of a base there, we might start to see that dollar strength reignite next week and maybe push off there, which will obviously in turn push up the CAD and the dollar Swissy as well. So a good one to watch, but probably not a great one to trade. All right, we'll have a quick look at the euro, which is the direct opposite, obviously. This has tried to break the 119 a couple of times this week. You can see we've got a big indecision doji, long-legged doji here. It's an indecision candle for a reason, because obviously the market doesn't know where it's going to go from here. Again, light markets aren't going to help this decision, but I think this is probably going to hover in this range. I don't see any big moves happening here this week, so it might push up and try and maybe get to the highs again of the 1942 area. Maybe it'll push up to 1950, but more than likely it'll probably pull back under the 1900, and we might be able to get a chance to short it back into the sort of 118.80 area. Again, this is a very short-term scalp. I'd only be looking for 20 or 30 pips on this one, but while it's sitting above the 119, I'm not that keen to trade it. If it gets back down below the 119 and makes a couple of smaller higher high or lower high and lower lows on a 15-minute or a 1 hour, I'd be more inclined to probably take a look at this and maybe take it for a short down to the 1880 or 1875. But again, it's only a scalp. It's only a very small trade, and nothing to be excited about. It doesn't excite me at all, this one, so I probably wouldn't be taking this trade unless it absolutely gets a perfect series of higher highs and higher lows, or lower high and lower lows on a 15-minute chart, and has a clear direction either to the 119 sort of 45 or the 118.75. All right, we'll go over to the pound USD. This one's been a good one. It's done everything we've wanted it to, so there's no reason to think that you should definitely be out of this trade by now. We talked about the double bottom earlier in the week. Here it is there. We've seen the neckline play out. We've seen it retest the neckline, and it's been a steady path since. So this week has been all up for this one. Had a little bit of a rejection a few days ago, but it went to the 134, which is where we thought it would. That was definitely the take profit zone on it. There's no question about that. If you didn't take it there, I'm not sure what you were waiting for, but unless you went in fairly late. But for mine, I wouldn't be trading it above the 134 until it breaks the 134 and retests it from above. I think even if we get a close above the 134 on a daily chart, it's probably going to, it could easily be a fake out, and I'm very concerned about those. So at key level, so what I would want is probably a break of the 134 and then a retest of that level from above it. And if that happens, then it's looking long, and it's looking long for quite a bit. So there's obviously still, Brexit news, there's, light markets. So with this one, you're absolutely just shorting it and longing it on very, very small time frames at the moment. You can see you still get it, even though the market looks quiet. The resistance was up here, but you can see you got a series of lower highs and lower lows on a 15-minute. Each of those were reasonable trading opportunities, but now it finds itself in the middle of nowhere. And I think that we need to wait for either the push and break of the 134 or a series of lower highs and lower lows. And if it gets below the 133, then we could look at starting to short it good and proper again. But again, it's a very short scalping opportunity only, I think, for the next 24 to 48 hours. Probably even the Monday Asian session is probably not going to give us a lot of guidance, but the action probably won't really start to happen, and we won't get clear direction until the London Open on Monday, I would imagine. All right, so look, the last one we'll have a look at is the US 500. This one's going to be affected the most, I guess, by a public holiday. And look, it's generally just sort of meandered down over the last session. You can see that the 4-hour candles, the last couple of 4-hour candles, have been pretty negative. It's come down to a bit of a roll reversal zone now, and it's on the 20 moving average on the 4-hour. Not paying a hell of a lot of attention to this, mainly because it's obviously pretty low volume. But when you go on a daily, we've had a little bit of weakness here. The MACD, it's still pretty strong. I mean, even though the signal line's going to come out of the histogram shortly, it still looks pretty strong. Like, those peaks are fairly equal. It's still very, very bullish by the looks of it. It's not really showing a lot of signs of weakness except for that 4-hour and probably the 1-hour. You can see that we've had a little bit of a weakness and a little bit of a sell-off here. Even though we've got the pretty much all but got the lower high and lower low sequence on the 1-hour, this might short down to maybe the 3,500 level, probably 3,550 in the shorter term. I don't know if it's going to do that this week or even early into next week, but it is historically seasonal that the S&P does often come down a little bit after the Thanksgiving holiday. It usually runs into the Thanksgiving and then sells off for about a week or two before the Christmas rush. So it wouldn't surprise me at all to see this continue that trend. We've had a very unusual year and not much has played out like it should have. So I guess it would be ambitious at the most to say that this is going to do that this year. But we can only go on what history tells us, and it has been historically weak after Thanksgiving. So I'm going to go on that and probably lean to the lower side. Technicals are basically indicating that as well, even though it's light volume. So if we get a clear break down here and we see the 1-hour change of trend confirm with a nice close down here, then I'd look at maybe shorting it to the 35.50 and then 3,500 level if it gets there. But like I say, probably 20 to 50 pip moves on this one. That's all I'd be going for. The 25 moves, at the moment, it's at, say, 36.20. To break down there, it needs to get around the 36.10 mark. That would make me happy. Then we can be looking for that 60-point move down to the 35.50. That would be the first target. Okay, the 35.50 is, I'll put a horizontal line there. All right, you can see that this level is obviously pretty strong down here, and this is why we're aiming for it. When we go down to a 4-hour, you can see it even more clearly, and then the daily highlights it even more. So you can see it's a very, very strong level. The 30 that's the 3250 on the red line. That's not the one we're looking at. We're looking at this green line. Okay, so the green line here, you can see that it's a roll reversal zone. It was resistance there, support there, support there. The important thing about this is that the 20 moving average is also there on the daily. Okay, so if it does come down to the level that we want it to, which is the 3550, the 20 moving average is going to be there to also catch it. So it's a pretty good aim to go for that one if we get the series of lower highs and lower lows on the 1 hour. So make sure the price action is giving us what we want before we trade this one. And if it does, we've got a very clear target. All right, so I hope everybody's had a good week's trading. Although we haven't had big moves, we've had consistent moves, and it's given us some good scalping opportunities. So we stick with the scalp for early into next week until we get some clear breaks of these levels. But if they don't come, it doesn't mean we're not trading. We're still just trading on the shorter term. Hope everybody has a great weekend, and I look forward to seeing you next week.